Peter Lynch, but make sure you know, I mean, all of us know Warren Buffett, right? So I'm going with the obvious Warren Buffett screen. You see this? Benjamin Graham and Warren Buffett. All of you see this? Yes, no? Am
Yes,
I
sir.
audible?
Yes, yes.
Okay. So just click on the Benjamin Graham Warren Buffett screen. And if you do that, you'll get a list of companies. Yes. And what I'm going to do is I'm just going to filter by PE ratio, low to high. Okay. Initially, high to low will come. We'll click one more time. So it gives you certain information, right? Gives you certain information. You see all the PE ratios. I'll take companies in general between 10 to 15. You can take any companies in this, and there is a potential for stocks in this to become multi-baggers. Now, why is there a potential? So if you scroll down, the screen is based on this, right? Okay. Screen is based on something like this. Sales greater than 250 crores, debt to equity less than 0.3, interest coverage 4, greater than 4, return on equity greater than 15, price to earnings ratio less than industry PE, dividend yield greater than 1, price to earnings less than 20. You can even change this, modify this, whatever. But this is the Warren Buffett screen, okay? So all these companies have potential to become multi-baggers because we have selected them based on multiple criteria. Yes? And within this, I'm taking the lower PE companies. Why am I taking the lower PE companies? They, valuation wise, they are cheap and they give us additional margin of safety. Yes? Are you understanding? Yes? No?
Yes, sir. Yes, sir.
Yeah. So this is the logic of selection. Now, once you select this, you have to do some further analysis. Okay. So I will share essentially a template for that. So if I go to financial modeling 24, there is, we'll sort this by type. You have to dig out the balance sheet, the income statement, and all those things. And there is, okay, where is this? Financial modeling test, data analysis, business valuation. Okay, I put it, let me see. Here, this is the one. Okay. All right, so let me share this also. So I'll go back to the Gmeet. What screen do you see, students? Do you see any Excel? No, right?
No, sir. It's screener.in only.
Okay, it's screener only. So we'll stop sharing this. How do I stop sharing this? I think I have to go to the web here. I'll do stop sharing. Okay. All right. Now we'll go. Present. Present window. Yeah. So this is what I want to share. So you guys see that screen now?
Yes, sir.
Yes, sir.
So you have to get historical data from the income statement and the balance sheet and fill this. Essentially, this is a combined sheet which looks at, yes, balance sheet, income statement, some ratios, profitability ratios, liquidity ratios, efficiency ratios, solvency ratios. If you can do this sheet, DuPont analysis, Altman Z-score, Piotrowski. If you can do the sheet for your company, this will give you the basis for analysis as to why the stock can be a multi-bagger. I will share this with you. Yes. Okay.
Okay.
Yeah.
Yeah.
Yes. So first screener.in, screen it using any screen you want, preferably Warren Buffett, Peter Lynch, one of these great guys who are great investors. Yeah. Then I'll share you this template. This will form as a basis for analysis. Typically, equity research analysts prepare reports. Okay. You can see equity research reports like this. I'll show you in a moment. But this Excel in itself, you can make that Excel that I'm just showing you into a report. Okay. Where is this? I had downloaded quite a few. Anyway, I'll share you the equity research report also in the WhatsApp group. I have it in my phone somewhere, and I have it here as well. 1 minute. It's actually here in the financial modeling GC. So uh, classroom. Where is the classroom? So in this, I'll just pull up financial modeling, and you'll see a report that I'm going to show you. This I'll share. So if you make a report like this, then I think this has got too many mark entries and all that. But I shared a link. Anyway, I'll just share it on WhatsApp. I can't find it now. So equity research report, if you write and whatever you did in your Excel, you capture that. You should ideally do a DCF also if you can. All of you know how to do DCF? Students? Yes, no? Excuse me? Students, are you here?
Ye-
Hearing me?
Yes, sir, we are here.
Yeah, so you know how to do a DCF?
Yes, sir, we
Yes.
have an idea, but
Yeah. Like exactly, we are not sure, but we can try.
Okay. So what I will show you is there's a site called Alpha Spread. Okay, it automatically does DCF. Only thing is you have to tweak the assumptions.
Okay.
So this is Alpha Spread. Yeah. This is Bajaj Finance. It also gives you best case and worst case. Okay. There you go. So all you need to do is you scroll down. Yes. You see a DCF model. It tells you what the assumptions are. You have to tweak these assumptions.
So we can
And,
still see the Excel sheet only.
Excel.
okay, okay, okay. So I will share that again. One second.
so what's the name of the website?
Alpha Spread. ALPHASPREAD. Where is that? Where is that? Here. Are you seeing it now? Uh,
Yes, sir.
hold. Are you seeing this? Bajaj Finserv?
No, sir. It shows one problem found in network. It's
Oh,
no, it's something else.
okay. Stop sharing. Okay, I'll just switch back to the Benjamin Graham's thing, and then there I'll just change it to alpha. Yeah, you see that now?
Yes, sir.
Yeah, so you can go down and tweak the assumptions on the DCF. Okay, so if you look, the beauty of this site is it gives you a worst case, best case scenario. So you can pick any company here, you can put any company here and find the DCF value. So you don't have to break your head over it. You can just tweak the assumptions and build the GC. And it'll give you a complete DCF in like 2 seconds. Automatically
Okay.
by default, and it tells you whether the company is overvalued. Now you're going to do this for your company which you pulled up, okay? Yes?
Mm.
Whichever company you got from screener, which you narrowed down. Not all
Oh,
companies will be multi-baggers, right? From
yeah.
screener, you narrow down, you find your company, put it in, do the DCF, and those that other Excel spreadsheet that you've got. Yes? Yes, students? Did you get
Yes,
it?
sir. Yes.
Then you can see if it's undervalued, overvalued, etc. You make a nice report, you present it, I think, and you can explain. If you explain what you present properly, then I think you should get the job, hopefully.
But then we can only like type in 10 lines, like we have to answer it in 10 lines and things like that. So we are not
Oh,
sure.
okay, okay. So once you
Yeah.
do the analysis, it will become very obvious to you. Yeah.
Okay.
And of course, you can show it to me and I can help you also afterwards.
Sure, sir.
So since this is tomorrow, I thought I'll just do a meet and finish it off. So because then I can at least give you some input for you to try.
Yes, sir.
Okay, students, do you have any questions, further questions?
Not yet, sir, but then after doing this, can we come to you after exam tomorrow if we need some help?
Yes, yes, yes. Of course, of course. That's the whole idea. You
Okay,
can
sir.
you can do it, try it, and then come back and I can give you further input on this.
Okay, sir.
So I hope that was useful, students.
So I have a question.
Yeah.
So it's regarding the last question mentioned in the form, the stock re-rating. What are the levels for stock re-rating? So
What
I
are
want to
the?
know levers for stock re-rating.
Yeah. Oh,
So
there are more
uh,
questions. I only saw the first three.
And there are only three questions, though. The third one he's
So he's
asking.
talking about the third one. He's talking
Okay,
about the third
third
one.
one.
last
What
one.
are the headwinds and tailwinds?
No, no, after that.
Not that.
After that,
After
after
that.
that.
Oh, what are the levers for the re-rating? Okay, so how will a stock suddenly become favorable? What are the favorable conditions? Right.
So it has to
So
be macro factors or micro factors, like
both,
company based
combination of
or
both.
industry based.
It's both. Macro first, okay, then
Okay.
micro, right? So see if there are any macros, micros. So for example, tariffs and all also you should see if your sector is influenced by tariff now. I think Trump is threatening the auto industry. He already did
Yes,
something in the
yes.
pharma industry.
25% today.
So all these things you should be aware. Things like this. How is the economy going to do? Are we heading into a recession? If so, will this sector be influenced? So all those things.
So, and this stock re-rating, is it based on the stock price, the PE, the earnings, or debt,
Okay,
or what?
so the re-rating means if the company's PE is now 7, right?
Okay.
A re-rating means the PE will increase to 8 or 9. If the PE increases to 8, 9, 10, 11, suddenly something favorable is happening that is causing the P to go up, even though the E stays the same.
Oh,
So the
okay, okay.
PE increases and hence the value goes up, the share price goes up. Even though the E stays the same, now suddenly some dynamics are saying that the E may increase in the future, so the price is trying to go ahead and get re-rated to reflect that reality. Are you
So
understanding
it's
what
basically
re-rating
a,
means?
yes, sir. It's basically a leading indicator of us for a stock.
So basically, if things are moving favorable in the company's thing, the stock price will get re-rated, meaning the company's future potential suddenly increases, and people will
Oh,
start buying now to reflect that. That is
okay.
re-rating. The
So it
opposite of that
happens.
is de-rating. That also you should be careful about. Re-rating is fine, but what if there's a de-rating when conditions go against you?
Okay.
Yes, students?
Mm, yeah, that's it. Sir.
Okay. So I hope this was useful for you guys. I think some input has come from my side, but I think more can come after you do the analysis. Let me see how I can put this thing, Excel to you. Chat. I don't know. There's no, is there a provision to share a file? Okay. What I'll do is I'll just send all these things via an email to one of you and you can just forward.
Okay, sir.
That will do then.
Yes, yes.
Okay, students, thank you very much then. In
Thank
that
you
case,
so much, sir.
you can always WhatsApp if you have further questions.
Sure, sure.
Okay,
Thank you,
thank
sir.
you. All the
Thank
best
you
for
very
your
much.
Thank you, sir.
exams.
Thank
Thank
you,
you.
sir.
Bye.